Hey guys, DuCheck Lifestyle here, back with another video. I hope you all are doing well. This document came out back in 2017. However, there's an updated one which came out this month on the 25th, which I am going to read to you. I'm going to go over a little bit of this one. Basically, Ripple proof of concept. We carried out, and this is the Bank of England, carried out a proof of concept with Ripple to explore the synchronized movement of two different currencies across two real-time gross settlement systems linked using Ripple Connect and integrated Interledger protocol. Right? Go down a little bit more. And here they had in January 2020 digital regulatory reporting pilot phase, and then let's go back. Baton System Gemetics or Glometics Technologies Limited, MindBridge analysts included proof of concept, and that was in 2018. Both of these were in 2018, November 2018 and July 2018. Then we come over to March 2019. Digital regulatory reporting pilot phase, and they updated this again in 2020. They have more. However, I am not going to go over all of that. What I want to focus is on this, right? And this came out on the 25th. The Bank of England real-time gross settlement service, an open platform to drive innovation. Speech by Victoria Cleland. Let's go down if we can. Oops. Right. Victoria Cleland describes how the Bank of England is enhancing its core payments infrastructure and policies in light of the opportunities arising from innovation and new technologies in the payment landscape. Technological innovation coupled with shifts in demand for payment services driving transformation in financial and payment landscape. Today I will outline how the Bank of England is enhancing its core payments infrastructure to support this change. The way users transact has changed significantly in recent years. I think that's been since 2019 and continue to evolve. There has been a decisive move towards electronic payments and increasing trend toward always on real-time retail wholesale transactions. Contactless payments using not just cards but also phones and watches are now widely used, and online payments continue to increase. The change is not just about technology but about the fundamental shift in user behavior and preferences. More people now expect financial transactions to keep pace with speed of digital communication. The nature of transaction is always changing, with a continued growth in cross-border payment values. Global payments have expected to increase significantly by the end of the decade, from 190 trillion to today to 290 trillion by 2030. This is a function of our increasingly interconnected global economy, where transactions are becoming more international and are often driven round the clock operations. To support this move and following the G20 cross-border payment roadmap, many improvements are being made by the public and private sectors working collectively to reach the G20 targets for enhancing cross-border payments. In his July 2023 Mission House speech, Andrew Bailey described the work of the bank is undertaking to explore innovation in retail and wholesale payments while maintaining confidence in the value of money and the settlement of payments. My focus this morning is on wholesale settlements in central bank money and enhancements underway, and I am looking forward to hearing Joe Kramer speak about retail payments in the next session. Central bank wholesale money, the reserves held by financial institutions at the Bank of England, is the most liquid and widely accepted settlement asset in the UK. It offers highest level of safety arising from backing of the central bank, which reduces counterpart credit risk. Due to these properties, final settlement in central bank money is foundational component for many domestic and cross-border payments. The Bank of England makes this asset available via its real-time gross settlement (RTGS) service by providing reserves accounts to banks and building societies eligible for sterling monetary framework settlement. Accounts to payments system participants and settlement agency services to financial market infrastructures. RTGS is the beating heart of that financial system. So we want to ensure that it can continuously adapt to the changing needs of the industry, and that safe and resilient settlement is essential. Bank money remains at the core of the payments landscape. Our vision is for RTGS to act as an open platform for change, innovation, supporting the bank's financial stability and monetary policy objectives. This platform should drive improvement in wholesale settlement efficiency and encourage a competitive ecosystem to firms while minimizing credit and operational risk. Ultimately, we want to support development by industry of innovative features which would lead to cheaper, safer and faster domestic and cross-border payments. To achieve this, we are making enhancements to the RTGS service to catalyze industry innovation in a number of key areas, increase transparency to empower firms and users in making better informed economic decisions, greater automation to speed up payments and cut costs by minimizing manual intervention, and introducing new services leveraging payment programmability, which could help to save liquidity and reduce settlement risk. We are also exploring how wider access to RTGS platform and longer operating hours, as well as boosting resilience, can help foster innovation. We are renewing the RTGS infrastructure. The RTGS infrastructure are currently being renewed to deliver more resilient, flexible and innovative sterling settlement. The first phase of the RTGS renewal program, which focused on implementing ISO 222, and I have spoken about the ISO 222 meshing services, was completed in June 2023, and this year we will transform to the new settlement engine. The renewed service will provide benefits for the industry across 4 key areas: increased resilience, greater access, wider interoperability, and improved user functionality. ISO 222 supports cross-border payments by speaking a common language, which increases global payment system harmonization. It also offers the benefit to individual firms through richer and higher quality data, aiding straight through processing, enhanced compliance and fraud detection. We continue to work with industry to encourage consistent data used domestically and internationally. We support HVPs. I don't know what that HVPS is. I don't know what that is. A set of guidelines for payments made through high value payments. That's what it means. However, the greatest benefit of ISO 222 can be realized in industry embracing it and uses the data to support this. Proposed codes and legal entity identities (LEIS) will be mandated in specific tax payments beginning from November 2024 and structured across and remittance data a bit later from November 2025. So this is a 2-year rollout. No, it's been a 3-year rollout actually. Anyway, if you like this kind of content, please do like and subscribe. A new core. Before I read on, I'm not going to finish this all because it's a bit long. It's very long. I do have a video to play you, which I hope you will understand and help, because it kind of like summarizes some of what I'm trying to say here. Anyway, we are renewing whether access to RTGS could be further improved. Over recent years, to support the evolving payments landscape, the Bank of England has introduced several changes to its policies that govern access to real-time gross settlements, increasing RTGS access, particularly for non-payment services providers. Financial market infrastructures and foreign banks hold significant potential to boost efficiency, transparency, and resilience in the global payment system, as envisioned by the G20 roadmap. So I did mention about 2017, and I did show you that document from 2017. I am now going to move over to the video, and so let me get that done because this is long. I can put a link in this. Well, I will put a link in the description. You guys can go and read the whole thing for yourself if you want. If you like this kind of content, please do like and subscribe. 801 XRP posted this, so let's get straight into it. Let's get it up so you guys can go listen to it. Let's go.
So many countries in the emerging markets are very quickly thinking through and developing frameworks for CBDCs or stable coins to be used domestically, and that creates kind of a sea change in how you can think about moving value between countries. In the old model, the only way to move value was to message between a bank in one country, a bank in another country. The Romans used a method that we use today. We just automate it. It's computerized, but it's a really old method. So the opportunity here is to switch from the messaging method to a completely connected ledger synchronization between a balance, let's say the UK, and a balance in the Eurozone. So at Ripple, what we are doing is focusing on building out that DLT international network. And we do this by two things. One, we interconnect with the ledgers of banks and payment companies in national clearing networks. And in that context, as the European Union gets behind and supports the growth of CBDCs and domestic digital assets, then the ledgers that Ripple is connecting to, let's say, for example, from a Canadian repository to, let's say, a French repository, if both of those accounts or wallets or run are supported by digital assets, then the value exchange can be immediate, atomic, and have blockchain integrity, even though both ends of the payment exist in very different blockchain environments, one in my example in Canada, one in the European Union. So we're working on the interconnection. We call the model interledger, interconnecting between digital asset blockchains. Now that, if you like, addresses the need for cross-border payments to flow with the same velocity and the same scale that domestic payments can flow. So you've got to solve half the problem. The second half of the problem is all around liquidity. And the kind of elephant in the room is today the world locks up around, I think it's around 10 to 15, whatever, $trillion at any one time in balances and nostros in different parts of the world to fund payments which are sent in great big chunks at end of day or end of week. The opportunity here with CBDCs running domestically and with a bridge asset, another cryptocurrency model, a bridge asset to connect those CBDCs together, the opportunity is to deliver liquidity on point in the moment, in microseconds, from one part of the world to another. And the model that we focus on is using XRP, which is a very high velocity and very high volume digital asset. It's a free floating asset, unlike a CBDC or stablecoin. Use it as a bridge currency between these CBDCs. So you imagine a world in future where there are, let's say, 180 individual CBDCs per jurisdiction in the world. Making markets between those CBDCs is quite challenging unless you have a common single point, the bridge currency, which then enables connections to be made more efficiently and markets to be made between these individual currencies. So you put that together with both the bridge currency between those CBDCs and the overriding ledger connection between the blockchains that run those CBDCs, and you are kind of redefining how value is moved cross-border. It's a complete departure from the messaging model that we've automated but haven't changed. And it moves into an immediate liquidity, a non-trap cash, a wallet-to-wallet, a micro-payment model. That's also really important for extending reach. European Union being a very strong, developed economic bloc, it's in a great position to then help leverage and grow inclusion around the wider region across Eurasia, Sub-Saharan Africa, Middle East, South Asia, Southeast Asia, and by leveraging what you're doing in the European Union and with the directive that you've currently kind of propagated, leveraging that to benefit those who need very high volume, very immediate, low value micropayments with very limited liquidity tie-up. It's a massive opportunity I think we can grasp by tackling that cross-border problem.
So, look, this came out in 2017, and he was working with Ripple at that time, connecting ledgers, CBDCs, bridging them using XRP. So, whether the Bank of England is now going to be using XRP, I cannot say that. All I know, it leads towards them doing that, given the testing that they've done on all that kind of stuff. Anyway, like I said, if you like this kind of content, please like, subscribe. Take care of yourself. Have a great day. Digital Lifestyle out. Bye.